Hey everybody, welcome back to The Long Game. I'm Brent Schafer. Along with me is Mr. Tyler Pearson. We are both certified financial planners at HFG Trust, and today we are going to be chatting about 5 myths around financial planners. Tyler, how you doing, man?
Doing great, Brent. How are we doing?
I'm doing good. We've got a little bit of snow on the ground today, but golf
Doesn't
season's on its way.
That's right. It doesn't look snowy where you are.
Yep, this is alive. The waves are frozen in time, just like that. So for the topic today, Tyler, I want to talk about 5 myths that people may have about financial planners, financial advisors. I'll just start off the bat here. Myth number 1, financial advisor should always deliver positive returns. What are your thoughts on that?
Well, I think it's a good thing we read with a myth, or led with claiming it to be a myth off the gun. I do think that's a common misconception, though. I talk with people pretty frequently who I think have kind of misconstrued expectations of what it means to work with a professional, money manager, financial advisor, financial planner. Obviously, investment management's a big part of what we do, but I think the most important part about investment management is for planners to teach clients what realistic expectations are in investing for our future goals. So for anybody to be promised positive returns every year, you're probably not taking on any kind of real risk. You're probably accepting low returns. And at that point, you might as well just have the money sitting in a bank account, CD, something like that. So when it comes to stock investing, portfolio investing, the reality is 3 out of 4 years typically are going to be positive. 1 out of 4 years on average might not be positive. So I definitely wouldn't say that people should be delivering or should be promising positive returns every year. What are your thoughts?
I think naturally positive returns are the goal and the objective is to have growth of capital. But you did talk about something there. It's like the guaranteed return, and there are investment products out there that do guarantee a return or set a floor. And generally it can be too good to be true, right? There's usually I'm giving up something, whether it be upside or, just underperformance if I am getting that guaranteed return, or it could cost, an arm and a leg to be in that product. But yeah, I think that underlying mechanism for what we do with a lot of our clients is in the equity and fixed income markets. Those aren't always positive. And I mean, that's what we try to do is just connect people with an investment strategy. We don't get any trails or any fees off of what we put people in. We try to have them, invested in the best thing for them. And a good advisor will go, I think, the extra mile or just do a good job of setting those expectations and making sure that the clients know what they're signing up for.
Right. Yeah, and I think you brought up an important point, which is, of course, positive returns is the goal. We expect positive returns over an investment cycle. Every single year is not necessarily, obviously it'd be great, but that's not really the goal. It's not the expectation. And history has shown us it's not the reality of public market investing.
Perfect. Okay, transition into myth number 2 here. Financial planners are just investment managers.
Financial planners are just investment managers. Well, there certainly are people out there that only manage investments. Typically, they probably don't call themselves a financial planner. My guess would be they're, maybe a financial advisor, but investment manager, something like that. I think to get the best bang for your buck and the most value out of working with a professional, you're best off working with someone who is, yes, managing your investments, but they're aligning those investments, kind of like what you said, with your goals and objectives in life. I think if you're just managing investments, it's hard to manage somebody's investments when you're not aware of their full picture. That's something we take great pride in, at HFG Trust, which is we're here to help you achieve what you want to in life through smart financial decision making, smart investing. So while I guess the myth would be that financial planners are just investment managers, I don't think that's true. But there are people out there that's just what they do.
Yeah,
what are your thoughts?
Part of it is having the full coordinated plan. Holistic is a term that gets thrown around in our industry.
Right.
I think if you probably look up 10 or 100 financial advising websites, they'll probably say some form of holistic planning, just because
comprehensive.
That is what comprehensive. That's what it needs to be. We've got our investment portfolio. We need to know our tax situation. We need to know how much we're going to live off of in retirement. Estate planning, you can kind of lump that in there too. And I'm just going down the disciplines of what the CFP curriculum teaches you, which, that is becoming more and more commonplace now and table stakes on what a financial professional needs to have. Yeah, I just think that the service is expanding and it's deepening into retirement planning, tax planning, also integrating a good estate plan for people. It's raising the bar.
No, absolutely. I think to add a little color to that, because that's certainly where the industry's going and really to a large extent has arrived. But historically speaking, and I think this might actually be a theme for all of our myths, where a lot of the myths come from is when you look at the history of investment management. 40 years ago, having somebody do your work on a tax plan, work on an estate plan, work on a retirement plan, and manage your investments was few and far between, basically unheard of. So, I think there used to be a lot more people who were just managing investments, and that's where you hear stories about stockbrokers who were just selling certain individual stocks, or at some point, mutual funds, hedge funds, where they're just trying to make the most return on whatever sum of money they're given. And I think the consumer, the individual, has kind of started to demand a more holistic experience where everything ties together. And I think in turn, it's created a better environment for people to seek financial advice.
Okay, then let's just turn that into myth number 3. If I'm doing well financially, I don't need an advisor or a planner.
Yeah, you're good. Just kidding. Just kidding. No, I think I do hear that, especially out of people that are a little bit younger. It's easy to go, hey, I feel like I'm ahead. I feel like I'm doing the right things. I don't think that I need to work with a professional. It's not worth the small expense that it might be. And I'm sure there's individuals who wouldn't benefit from working with a financial planner, but I've taken a lot of pride in the fact that everybody I've worked with, I think, feels like they've come away with some value. And I know you have a couple things you probably want to touch on in terms of specifics, where do we help people that are doing well financially?
Yeah, I mean, I think that doing well financially, it could be a loose definition. How are we doing well? Is there a lot of income coming in? Are we, just net cash flow positive at the end of each month? But really, what I would say to that would be, okay, it's great that you're doing financially well. That's awesome. I think that we want that for everybody. Whether you work with me or don't work with me, I still want you to have a good life and all of the above. But what we can do is take where you're at now, help you put some more structure around it. Where are your goals? What do you want to do with your life? And I mean, we can sit here and ask those questions of ourselves, but like when you have an interactive experience, it's a little bit more, it's deeper, right? You've got some accountability there, as a partner and a coach, right? That kind of gets thrown around. But optimization, I think, is the goal that you and I would look to do for anybody who's in that younger but rising crowd. Is your tax plan correct? Are your investments aligned with where you want to go? Are the accounts that you're investing in, is it an IRA? Are we making a good W-2 wage, or is it a taxable account? Like, we might need to park some money on the sidelines so we can, expand the business or buy a rental property, or, just have cash on hand, have it invested, but not have to wait until 59 and a half to go get it without paying penalties. So still, we've committed quite a bit of our lives to learning the rules. I just think that for someone who's not in this occupation and who has another profession, like, it's pretty extensive, the knowledge that you need to do and the research that you need to do in order to truly optimize your situation.
Absolutely. I think you mentioned learning the rules and kind of touched on the importance of working with someone who sees it every day, is aware of the updates to the rules, and then can help you as an individual, regardless of where you're at financially, use the rules to your advantage to best fit kind of your goals in life. And I do think that there's value to that.
All right, myth number 4, advisors aren't worth the fee.
This is a good one, because I've certainly heard this one many times, and I guess I would lead with, everybody gets to decide what is and isn't worth it to them in life. But as someone who works in this profession and sees what we add to people's lives, I feel that everybody that I've worked with, and I hope they feel the same way, has been happy to pay, the fee that they pay to get the advice that they get. And where I hear it the most often, kind of hear advisors aren't worth the fee, is on the investing front, especially from people who, feel like, hey, that financial advisor, Brent and Tyler, they're not smarter than the market. Like, they're not going to be able to beat the market. So why would I pay them, a fee to beat the market? Because they have to beat it by more than just their fee. And that's, a valid concern. But as me and the most important thing we do on the investing front, and where we usually save people the most money, is we keep people invested in a plan that's appropriate for them. We put them in a situation where if there is a downturn in the market, if they're nervous and they would normally jump out, we're the ones there kind of holding their hand, making sure that they stay on the ride. If they're in retirement, they're taking dollars out of the portfolio and there's a prolonged downturn, we've put them in a proper strategy where there is reserves that they can dip into and not have to sell stocks at a loss. And we've seen how much money that can save people. It's far beyond any fee that you're paying. And that's just on the investment side. Then you look at all of the work that you're doing, like you said, tax planning, estate planning, retirement planning, that kind of stuff. And I feel like it's really a pretty fair deal. And I kind of went into the industry with the thought that, I want to be able to add value to people's lives. And so if we charge too much or too high of a fee and I can't add value, then I'm not doing my job correctly. So it's a thoughtful, mindful charge that's in place. Kind of rambling. I don't know what your thoughts are on it.
I think the most basic argument, like what you said, was you're scrolling through LinkedIn or Facebook and maybe the algorithm has picked up on the fact that I am a financial advisor, but they just show what $1 million is invested over 30 years and you got 10%. And then it's like, oh, here is what you would have gotten if you would have paid a financial advisor the 1% and, gotten 9% from your money. And I think it's just supposed to be something to get you to stop scrolling. And wow, I can't believe people pay financial advisors, and usually it's trying to promote some other form of product. But what it fails to take into account, like you were talking about, is the hand-holding, the helping someone navigate the markets as we go through downturns, placing them in an appropriate portfolio for their risk tolerance, planning the year-over-year tax plan. That's why I love that one, because it's a clear, easy value add, right? Of, hey, we kept you in the 10 to 12% bracket. We recognize some capital gains. And right there, I was able to save X amount in capital gains tax. All of those things we're trying to add in, offer to our clients to give them the value for what they're paying for our services. And again, just going back to where we're at right now is just so much more elevated than what a stockbroker was, than what, kind of an insurance annuity person would do for you. And at the end of the day, the consumer is ultimately just getting a better product. All right, Tyler, last myth, and then we will get out of here. Myth number 5, financial planning is only for retirees.
It's great. It's a great myth. I think it's funny because, I talk to people who are younger. Obviously, we talk to people that are older, people that want to know, like, hey, what kind of people do you work with? And we do work with a lot of retirees. Like, there's no way around that. But I think part of the reason that we work with a lot of people that are in retirement is because we started working with them prior to retirement. We helped them gauge when they were going to be able to accomplish that goal, how much money they were going to be able to spend in retirement, and then they continue to work with us once they get to that point. But the reality is there's things you can do throughout the course of your life, from saving for your kids' college when they're young to, working on efficient tax strategy in your high income years, while you're still working, and then the retirement planning 10 years leading into retirement is pretty important as well. So I do think that while retirees are of course important to work with, it's clear to me that there's a value add to work with an advisor, really at any age, or at least seek the advice. Whether or not you choose to enter into a long-term relationship, I do think it's worth checking in every couple of years with somebody and just say, hey, am I doing the right things?
Yeah, I mean, my question to that would be, would you not want professional advice and oversight, like during your financial time, and while you also still have time to make corrections? Very rarely is it A to B, right? It's A and then, oh man, something changed, new job, different city, different life goals, life objectives. And that changes the outcomes of your life. That changes where you should allocate your capital, all of those things. Now, we work with the retirees because, there's a lot of value that we can offer them and provide them. But same goes for people that are in their working years, right? And, I think the biggest thing would be, it's not touching base on the budget or just like the financial basics, but bringing it to their attention and like, hey, take a look at this. Like, where's your budget at? How much net cash flow do you have a month? Because over time, salaries change, compensation changes, and they might be victims of lifestyle creep. I think we could go so deep into all of the different situations and scenarios where we can add value. But yeah, I think I'm just super passionate about talking with people before they get to retirement, before it's too late. What's the quote? The best time to plant a tree was 20 years ago. The second best time is right now. And yeah, I just want people to, have access to quality financial information, because we know what it does over time, right? Like if you invest for 20 years versus 30 years, what the returns are, and just having that extra time, it's your best friend. Just talk to somebody sooner rather than later.
Yeah, no, absolutely. You hit it on the screws, Brent.
Perfect, Tyler. Way to go.
I had to bring it in at some point.
Yeah.
Recommended last episode.
Yeah, softly, but
Softly.
Yeah. Well, I wish I was out there at Wine Valley right now so I could hit a couple of good shots, but
I know. Going up there next
soon
week.
enough.
Playing in a
Soon
tournament.
enough. All right, everybody. Well, those are 5 myths about financial advisors that we hear and are out there. We just wanted to chat about, potentially dispel them, or maybe we didn't convince you, and so that's okay. That's okay. We're gonna keep.
Maybe we
keep
planted a myth in somebody's head that they didn't even think of yet.
Ah,
could have worked
in
the opposite direction.
That's all right, because we're gonna keep doing it.
That's right.
Anyway, Tyler, thanks for joining me, man. Really appreciate the conversation. We'll catch you next time.
Alrighty. See you, Brent.